The Nigerian government secured a positive judgment today at a London court in the case of a landmark $11 billion gas contract agreement case with a company known as P&ID. In the meantime, the volatility in the global markets and rise in interest are denting frontier African markets, including Nigeria, as the countdown to the final weeks of 2023 unfolds. Joining us to discuss all these and more in the new business week is Chukwu, a market professional and group CEO at Cowrie Asset Management. It's great to have you on the show with us this evening, Mr. Chukwu.
Good evening, and thank you for having me.
Most welcome. It's a pleasure. Well, let's get right into it. What do you make of Nigeria's victory today at a London court over the $11 billion P&ID landmark case?
For me, it's a major relief because given the current economic environment, our current economic condition, Nigeria couldn't have afforded another liability of $11 billion. So it came as a major relief. Of course, if you look at underlying issues, most of the legal practitioners I spoke with much earlier than now were of the opinion that Nigeria was going to succeed in this case, in the appeal, and that given that Nigeria had claimed that this contractual commitment was entered fraudulently and that there was no court in the world that would have given a judgment against Nigeria in that circumstance. But the most important thing that we have a judgment in our favor. It is not likely going to go beyond this point, and that will be relieved of the, even if you call it contingent liability of about 11 billion until prior to the judgment having prior to the delivery of the judgment.
Right, it's certainly a big relief there. But what would you say the lesson is in that case for Nigeria in terms of how the country structures and it handles its economic legal deals, agreements, obligations, all of that?
I think one of the things we should do as a country is to do a detailed review of how we got to this point. In the first place, how did we enter into a contract that was fraudulently induced? Because the issues that bribes we are given to enter that contract, who were those who benefited in such bribes? Have they been brought to the law courts, and have they gone through the legal process of trial and possibly conviction? We need to get that. But most importantly, we need to reset our process of entering into contract obligation on behalf of the country. And I think the Ministry of Justice and the Attorney General of the Federation had to redefine the process of committing the country into any contractual obligation. Contractual obligation of this nature should go through the National Assembly. It should go through the Executive Council. And I thought that was a practice prior to now. And it should go through the fine review of well-experienced legal team of the Ministry of Justice before commitment Nigeria signs such into law. But we must set example with those who committed the country into these malfeasance, who committed these malfeasance. Since the government has been of the opinion or made a strong case that it was induced by corrupt acts, it was a case where P&ID bribed people to enter this contract. We must identify those Nigerians and non-Nigerians who were involved in that, and we must make sure that the law takes its rightful course on them, so as to have a deterrent for others going into such, committing Nigeria into such fraudulent acts.
All right, absolutely big lessons to learn from that. But let's move on now to your assessment of the market in the first 9 months of the year. What's your take on this so far?
The market did quite well in the first 9 months of the year. At the end of September this year, the market had gained about 29.5%. Of course, today, the close of business today, the market had gained about 30.49%. So, in effect, the market in the first half of the year gained more than an average of about 30%, which is quite impressive, given that the economy, general economy, has actually been quite weak. If you look at the Q2 GDP figure, it came at a print of about 2.51%. Marginal improvement over the 2.31%. So in effect, the growth of the GDP is just an average of about 2.4%. But the capital market had gained about almost an average of 30% at the end of the first 3 months of the year. What led to that is because there are some sectors of the economy that actually sectors of the market that actually had performed the economy. The banking industry, for instance, several sectors of the economy actually performed the economy, general economy. And again, what happened was, because Nigeria's economy Nigeria's currency is not convertible. So Nigerian investors are stuck to invest in only Nigerian instruments. So the major fund investor, major fund managers like the pension fund administrators had no choice than continue to invest in the equities market. And we saw a more than impressive rally in the markets in the first 9 months of the year.
All right. And what is your outlook on earnings expectations for the last quarter of the year? I mean, we see that Geregu Power has just released an impressive 9 months result.
Well, if you look at the macroeconomic environment, I think we should have to moderate our expectation in terms of earnings or net earnings by quoted companies. What we saw in the first half of the year, where many companies, particularly the financial services industry operators, reported huge profit, may not repeat at that magnitude because, of course, many of them booked exchange rate gains. On the converse, many manufacturing outfits booked exchange rate losses. I also think many of them would have closed their open position, particularly those who had the negative open position would have closed it, the manufacturing sector operators. So you shouldn't expect them to suffer such losses. But in terms of demand, I think demand is moderating the economy. Overall, I mean, I'm talking of macro demand or the global demand in the economy has been moderating because of, one, we've seen a reduction in purchasing power as a result of high rate of inflation. We've seen depreciation of local currency has impacted on many household consumption. So we should expect that in terms, apart from the financial services industry, that many other sectors are going to see a slowdown in consumption, a slowdown in demand, and that could affect their top line and as well as bottom line. If you look at Geregu was one of the companies that reported a very impressive top line increase, about 55% top line increase to about $55 billion. But if you look at the bottom line, it increased from about 9.1 billion to only about 9.8 billion, just about 7.8% increase, because a lot of factors impacted. Look at the impairment loss, about 3 billion. Impairment loss of financial assets, financial instruments. That will also tell you that because the economy is going through difficulties, debtors might find it difficult to meet their obligations. Another thing that impacted on them was the tax liability, which grew from about 3 billion to about 6 billion. So between the impairment loss and tax, they lost about 6 billion, and then about 400 million coming from increase in net finance cost. So if you take out these things, and I think a lot of operators in the country will also expect to see depreciation in terms of the quality of their risk assets, or what they call cost of credit, is going to increase, because you should expect an upsurge or an uptick in default rate among trade creditors, trade debtors, as well as for the financial industry. They should also expect an increase in the non-performing loans. So you're going to see an increase in write-off, which could affect the bottom line of companies. But if you look at the top line, because Naira had depreciated and the average ticket of transactions has increased, you're going to see a sharp increase in overall revenue. But in real term, if you adjust for inflation and adjust to exchange rate, you will actually see that that increment may not be as huge as it looks on paper. Because, for instance, I take, for instance, the oil and gas sector. Previously, to do a 15,000 metric tons of PMS transaction was costing them about 4 billion. Now they need about 15 billion to do a 15,000 metric tons. So for a trading company in the oil and gas sector, you're going to see a sharp increase in revenue and possibly a sharp increase in gross profit. But ultimately, when you adjust for exchange rate changes, you may not see so much in terms of real increase in revenue as well as a real increase in profit.
Well understood. What do you think the key issues in the market ahead of next month's MPC final meeting of the year will be?
I think the MPC we have to contend with very conflicting factors. One, we've seen, like I said, the GDP grew about 2.151% in the second quarter of this year. That's still low when you compare it to our population growth rate, although an improvement over the 2.31% degree in the first quarter of the year. So the MPC, we've had praise to see faster economic growth. The MPC want to stimulate consumption, demand, so as to encourage productive activities. But at the same time, the MPC has to deal with the issue of inflation. We show inflation at 26.72% in September inflation figure. which is one of the highest we've seen in recent past. We've seen a continual depreciation of the local currency. We've seen Naira almost breach 1,000 at the investor and exporters window, or what they now call Nigerian Autonomous Foreign Exchange Market. We've seen Naira in the region of 1,200 and above in the parallel market. These are factors that are conflicting or contradictory in terms of the tools you need to fight them. So the Monetary Policy Committee will be hard-pressed in how do we stimulate economic growth or consumption without further worsening inflation and exchange rate depreciation? Or how do we fight inflation and exchange rate depreciation without necessarily further pushing the economy into a possible slowdown or recession? It's going to be a very difficult thing, but these are factors that we have to contend with in making their decision.
All right. And if we look at the investment landscape, what is the current global market in terms of volatility, higher yields on U.S. Treasury, and massive downturn in global bond market mean for Nigeria and frontier Africa investors?
Well, let's look at what will happen to the frontier investors. Of course, Nigeria is no longer attracting so much of frontier capital because of our current situation. But we cannot be completely insulated from what's happening in the global financial market. You know, basic thing, and when U.S. Treasury bills increase, investors have what we call flight to safety, where they move their investment to the U.S. economy, where they are gaining higher yield. And you know what happens that whenever yield on fixed income instruments go up, the prices of fixed income instruments will collapse or will decline. And so what we're seeing is that people are selling down on bonds elsewhere, particularly from frontier markets, to invest in what they consider safer assets, safer treasury instruments in U.S. And as long as people are selling down bond instruments, you're going to see a continued depreciation in their prices and an increase, an uptick in their yield, which is what is happening to compensate or to be compensate for the higher risk associated with investment in those frontier markets.
All right, lots to keep our eyes open for. I want to thank you so much, Mr. Johnson Chukwu, for joining us on Rise Exchange this evening.